all of those aspects are detailed in an investment committee memo that then allow me to think about this pretty quickly and make quick decisions.
Best ever listeners, before we get into today's episode and the interview with our best ever guest, I want to mention Fund That Flip, because Fund That Flip is an online lender that gives you fast, convenient access to really affordable money that you need for your flip project. So if you're doing residential flips, then the main thing I imagine that you're focused on, or the main two things, are the deal and the money. So if you've got the deal pipeline, but you need access to cash and you want to build a reputation within a group that will continue to invest their dollars into your deals, then go to fundthatflip.com/best ever. The founder of Fund That Flip is Matt Rodak, and he's actually one of my very first guests on the show. It's episode number 7. So if you have a chance, go check that out too. Familiarize yourself with Matt and what he's all about. But when you're needing money and you want an online lender that provides fast, convenient access to affordable capital for your flipping projects, then Fund That Flip's the way to go. Their team has over 200 deals under their belt, and you can actually, this is crazy, you can actually be approved immediately within 30 seconds once you put in your information. So go to fundthatflip.com/best ever and get some money for your flipping projects. Hi, best ever listeners. Welcome to the best real estate investing advice ever show. I'm Joe Fairless, and this is a show where we cut out all the fluffy stuff. We don't deal with that. We get straight to the real estate investing advice that moves your business forward. We've spoken to Barbara Corcoran from Shark Tank, Robert Kiyosaki, the author of Rich Dad Poor Dad, and many other successful real estate investors and entrepreneurs, and we're doing the same thing today. How you doing, Rajans Shastri?
I'm good. Thanks for having me.
Yeah, nice to have you on the show, my friend. A little bit about Rajan, and then he'll get into his background in more detail. He has over 12 years of experience in senior management roles across the spectrum of commercial real estate. He has, prior to founding where he's at now, he's the founder of Akara Partners based in Chicago. He was the principal of Campus Acquisitions, which is a developer and operator of student housing, where he led the capitalization and monetization of over $1 billion in student housing assets in the United States, which includes the sale of a $627 million portfolio. You can say hi to him and his team at akarapartners.com. That's spelled AKARA partners.com. And with that being said, Rajan, you want to give the best ever listeners a little bit more about your background and what you're focused on right now?
Sure. So to go back to when I got into real estate, I essentially got into real estate right out of undergrad. I went to school at the University of Wisconsin and joined a firm, a large real estate services and investment firm in Chicago called Jones Lang LaSalle, and have been in real estate ever since. I spent a good amount of time at Jones Lang LaSalle, really learning the real estate business from an institutional perspective, and then after spending some time there, had made a stop at another smaller boutique real estate investment firm prior to partnering up with a firm to build and develop student housing across the country. Prior to starting Akara Partners, over the last 7 years prior to, I focused exclusively on student housing. We started purchasing student housing property, then decided to develop student housing property, and ended up doing business in about 22 markets around the country, and had a few substantial exits of a portfolio that we bought and developed in 2012 and 13, which lead me to starting Akara. My partner and I had split in 2013, and I started Akara Partners. And now our focus is we've pivoted into the multifamily apartment sector, and so we have quite a few multifamily apartment developments going on. However, the company's vision is to be asset agnostic and be a dynamic real estate investment firm first, and a sponsor and developer of deals second. So that's how we're growing the firm. And we have quite a bit going on right now.
You sure do. And you have had quite a bit going on over your career. I want to ask you a question that I was just speaking to a previous or a best ever listener, hopefully still best ever listener. I was going to say previous best ever guest, but he's actually a best ever listener. And he asked me my advice, and I'd like to hear what you would say to this question. He's in college. He goes to NYU and he's in on the real estate track. And he was wondering, should he start in a larger firm similar to what you did, or should he start in a smaller one? What would you say?
It's a very good question. And I have my bias because of how I started. However, as new people join my firm, I start thinking about things a little bit differently. So I started at a larger institutional firm, and I learned to do business from a very institutional perspective. I think what that means is, I learned how to underwrite, how institutional equity looks at projects. I think because of that, it allowed me to really bridge the gap between sponsor, developer, entrepreneurial real estate group and institutional capital. So that's really where I think, and really the premise for starting Corcoran Partners and the vision for the company is to blur the lines between investment allocator in the real estate space and operator sponsor in the real estate space. So I think I'm able to do that today because I've sat in the institutional role early and then became an operator, developer, property manager, sponsor later through my career. That being said, I think that there's people who have done the reverse and started at a small entrepreneurial shop and then grown into an institutional shop and then decide where they want to be. I think having both is very important. So I wouldn't say that one is better than the other. We do have younger people at our organization that I think are getting a lot of great training being in an entrepreneurial organization because you get to wear a lot of hats and you get to see everything, every aspect of a deal from the sourcing phase to the structuring and putting the deal together phase to whether it be development or redevelopment or some value add component to the exit strategy. And the legal aspects of our business, which are very important, the leasing aspects of our business, which are really important. You get to see it all at a small entrepreneurial shop, whereas in an institutional shop where I started my career, it was very siloed. So you did your role and you handed it off to another group within the firm. And therefore, I think it was, even though you learned a lot, and hopefully if you're able to rotate throughout an institutional firm, you can start seeing the full spectrum of what you need to do to be a good real estate investor. Being in an entrepreneurial shop, I think, gets you there faster.
When you mentioned you were doing business in 22 markets across the country, what was your specific role in the team? I'll start with that. Being at at the time we were a small entrepreneurial company that was growing, I ended up wearing a lot of hats again, everything from deal sourcing to striking a deal with a landowner to putting the capital stack together on a development or investment to being involved in the selection of a general contractor to develop the property to dealing with municipal city issues to then further asset management and leasing all the way to the exit of the project. And so I've worn a lot of different hats in this business, and I think again, that when you're in an entrepreneurial setting, you end up having to wear a lot of different hats, including legal, which I emphasize is a pretty important part of what we do. I guess the main question I have, and that is, you're based in Chicago, right?
Correct.
How do you become so familiar with the players in each of those markets across the country and build those relationships or identify those markets? I mean, take the answer wherever you want to take it, but really the root of the question is, how do you do that across 22 markets and have that level of involvement?
It's a great question. So I would say that because we're in a very specific niche of student housing, and we're no longer doing a lot of student housing, but at the time when we had built and bought throughout 22 markets. We were in a very specific niche in where many of these markets all acted very similar, from a supply-demand dynamic, from an age of property dynamic, from a demographic of the student body. So there are a lot of similarities across those markets, even to the aspect of who the ownership of properties and land were. They usually in those markets were concentrated amongst 3 or 4 major players, which is unlike perhaps some of the larger markets. So there were so many similarities that allowed us to assume things as we got into markets, and also navigate, whether it be through city and municipal permitting and things like that, but also through just the local dynamics of doing business in a new town. So that was one of the reasons why we were able to spread ourselves throughout lots of different markets, because ultimately the underwriting, for instance, of a new project in the student housing space at the time was very similar. It was who was where your demand is coming from is correlated to the enrollment and enrollment growth, the age of property and supply and demand dynamics are fairly similar. And again, so we certainly spent a lot of time understanding each market. We had a pretty rigorous underwriting process of each market, but I think that the reason we were able to do that, to do business in so many markets so fast, was because we were in one property type looking at markets that were all very similar.
And now let's come back to the present with your company, Cara Partners. How many markets are you investing in now?
So we currently are fairly concentrated in the city of Chicago today. That is primarily because when I started the firm 2 years ago and was building out the operations and the team, I wanted to stay local. I will say the majority of our pursuits today are outside of Chicago. So now we are pursuing opportunities outside of Chicago, and most of the projects that we're looking at or pursuing outside of Chicago do have a tilt towards multifamily apartments, but we're doing a lot of mixed use that also involves retail and hospitality, sometimes office or other property types as well. But there's usually a multifamily component to it. Again, I guess to your previous question about how do you do business in multiple markets, I think the key is always finding information from the right people, finding the right connectors. I think I learned that fairly early in my career as we were navigating through a lot of new markets, and I try to implement the same philosophy at Cara and try to train the team to do the same.
Yeah, and I think one thing that comes to mind is it's in addition to finding the right information from the right people, you're asking the right questions to the right people once you found them. So when you find the right people, what type of questions are you asking? And again, we can be talking about any stage of the process. You can pick whichever stage, but what type of questions do you ask whenever you're either evaluating a market or a deal specifically?
So you start with trying to understand the landscape of the players in the market. So who owns the land? We're primarily urban focused company, so we like urban cores, whether that be in a smaller city, but just being in a downtown, walkable, transit-oriented place is really the focus of our firm. And so we want to understand who owns the land around certain areas. That information is public knowledge, so we can go and find that out. But we want to be able to meet some of these people. Certainly in some of the smaller markets, there tend to be, again, like I mentioned, a couple of large players that tend to know everything about a market. There's sometimes brokers, local brokers, maybe they're not even affiliated with a larger institutional brokerage house, but they're just local and they tend to know everybody. We try to connect with those folks to be able to understand who owns the property in the market, and if there's a specific property that we want to go after, we tend to also contact with a local legal counsel that also knows and has done business in that local market for a long period of time, because there's not only nuances to the way that people do business and in these markets, there's also nuances to local laws and certain municipalities with respect to zoning if we're going to do a development. So we always want to make sure that we get local representation from a legal standpoint. And then secondly, as I mentioned earlier, we want to make sure we understand who the players are and try to meet as many of them as possible.
Are you in meetings now where you mentioned some of the team members who were beginning their careers? Are they presenting you information either from hey, we should be in this market, or we should check out this deal?
They are. A lot of deals. We're in a somewhat fortunate position, maybe because of the size of our shop, but we are getting a lot of inbound deal flow in markets that we've targeted, but a lot of inbound deal flow once, we're introduced, or maybe I already know the right connector within those markets. And so a lot of it comes through perhaps me on the deal sourcing side, and then the team goes through an analysis of the existing market, and they do present then to me their thoughts about a particular market, whether it be market data on, if it's an apartment building we're looking to build, a market study on the apartment market, or whether it be an analysis of zoning and how difficult it would be to change zoning or get something through an approval process. So, yeah, absolutely.
What type of resources, let's go with the multifamily example, and it's a market study on an apartment market. Is it a report that is printed from a certain service, or is it a compilation of many things? And if it's a compilation, then what are the components within that you must see when you're looking at it?
Sure. So we formalized the process here, even though we're a pretty small firm. I think my background starting at a larger institution, we kind of do things at our small firm like a larger institution would. So we do have a formal investment committee process here, in where there is a formal investment committee memo that gets filled out. Certainly as we're running fast on certain things, sometimes everyone doesn't stick to the formalities, but for the most part, we like to meet on a fairly regular basis and discuss deals through an investment committee process. And that memo and that presentation hits all of the pertinent topics. What the deal and the market study and all of the pertinent information about the project as a whole, and then the transaction as a whole. So the risk aspects of the transaction, how much capital do we have to put up to tie the project up? How much time will it take for us to get through certain hurdles? Maybe they're approvals, or maybe it's hurdles like capitalization. But all of those aspects are detailed in an investment committee memo that then allow me to think about this pretty quickly and make quick decisions. So that's one. And then it's how they get that information from a data perspective. The great thing about the real estate business these days is that there's a lot of data sources now to get information. Whereas in the past, as you may know, real estate in general has been not as transparent of a business. They've been slow to adopt technology. It's been a very old school business, and very slow to implement some technologies that I think are very easy to implement. Now you're seeing data sources that can give you real-time information. You got Google Earth that can take you through a city essentially, and you can see exactly what's going on without actually jumping on a plane. So there's a lot of different sources now that you can use to help navigate both information as well as get an idea of what the landscape looks like before entering the market.
What's your best real estate investing advice ever?
I tend to think about this in more general terms. Don't lose sight of the fundamentals. I think ultimately people in the real estate world can get very excited about the ability to leverage assets with debt. And debt can be a very good thing and it can be a very bad thing. I think the key is don't lose sight of the fundamentals. Don't artificially engineer or financially engineer a return that hurdle that you're trying to meet with leverage. So I think that's one of the key advices that I think many people are which is close to many people's hearts today if they've lived through the last recession. I would say always assume that your pro forma that when you close on a project is wrong. And we try to be conservative in our assumptions because there's too many variables that could go wrong. And it's proven to be successful for us. And, we've not done a lot of deals because of it, but I think it saved us, in many instances. I think like a lot of different a lot of different investments, your going in basis always protects you. So be cognizant of what you're buying in at. Another piece of advice is maybe, everyone looks at backward looking data. So, as we all know, it sometimes isn't a good predictor of what could happen in the future. So we try to follow trends and try to get data in places where probably more difficult to get, but probably will predict better the trends of what's happening in a market. And we've typically followed the tenants. I mean, ultimately, real estate income is driven by the amount you can lease space for, whether that is through a apartment renter or a retail tenant or an office tenant or an industrial tenant, et cetera. And so we try to follow the trends of what's happening in those, particularly with respect to our tenants and understanding their businesses better, which can help be a predictor of what we are to expect from a rent perspective and from a location or movement of space perspective. I think those are the.
You gave us a lot. Yeah, I love it.
The one other thing that I would say is that this new world of real estate, technology hasn't yet, like I said, hasn't really been implemented in the way that it has in other industries. But we can see today really disruptive technologies that are changing the way we think about real estate. So I think that's the exciting thing for maybe young people that are getting into the business today, that are more in tune with what's happening with respect to technology. But we're seeing it daily.
And I just want to make sure I'm understanding when you said always assume your pro forma is wrong. So I always assume the broker's pro forma is wrong. But what do you mean by always assume your pro forma is wrong?
So well, absolutely assume that the broker's pro forma is wrong. What I mean by that is that, your pro forma is based on a lot of assumptions. And, a lot of your, assumptions are based on your experience in the business, which is great. But it'll never be 100% accurate. And so whether that's on, rent growth assumptions or your debt assumptions and what rate of interest that you could expect, or it's, how fast you're going to absorb from a leasing perspective, or how fast it will take you to re-tenant space in the case that you have some turnover that's coming up in the near future. Just always assume that it's not going to be accurate. And particularly, in our business, on the development side of our business, even much more to anticipate and assume with respect to your construction cost and what it's going to cost you for, once you get in the ground, things change, foundations could be more expensive or could change during the process. Municipal permitting fees could be different than you expected. So certainly taxes is a big variable out there that, no one can really predict, certainly in Chicago. So there's so many things in your pro forma that are assumptions. And my point by that is that just assume that it's not going to be exactly what you pro forma it to be. So leave yourself some room, some wiggle room in your assumptions.
Makes sense. You ready for the best ever lightning round?
Sure.
All right. First, a quick word from our best ever partners. If you need money for your flipping project, then go to fundthatflip.com/best ever. You'll know within 30 seconds if you're approved or not to get money for your residential flip. Go to fundthatflip.com/best ever. Best ever book you've read?
I'm not a big reader. I do pick up The Art of War from time to time when I'm going through a negotiation here and there. I have read, some of the interesting ones that pertain to our business. I've read some of Malcolm Gladwell's books, Tipping Point and Outliers. I thought that's really interesting. But like I said, I'm not a huge reader.
Best ever personal growth experience, and what'd you learn from it?
Early in my career, I was fortunate to be able to travel abroad for business, and was never able to do that in my studies. And so I learned a lot about other cultures and how people around the world do business. And what it's done, I think the biggest lesson is it allowed me to think about issues without prejudice or biases that we all have here. Once you get into a routine and you think about things the same way over and over again, it's difficult for you to think outside the box or think about things from a different perspective. It's allowed us to, quite frankly, do business with foreign groups, foreign companies.
Best ever deal you've done?
It's all really fun. I think the best deal, or the one I'm most excited about right now, is that we're developing a project that's really a hospitality-oriented multifamily building that incorporates both services as well as trying to deliver the right experience for the millennial renter. And so we've been thinking a lot about the psychology of the tenant, and it's been a lot of fun, just learning and trying to understand what this new generation of renters want.
Best ever way you'd like to give back?
I speak at schools. I went to University of Wisconsin for undergrad and Northwestern for grad school, and I speak at both every year on entrepreneurship and real estate. And I love doing that, and we'll continue to do that. I think mentoring and speaking engagements with people who are interested in real estate and entrepreneurship are exciting to me, and I love even hearing about new ventures and that some of these students are creating in the classroom. It's just amazing to see.
What's the biggest mistake you've made in real estate?
It's very easy. I would say that prior to the last recession, it was very easy and almost required for you to assume that cap rates are going to fall and compress to make your numbers work. And said another way, your multiples on your income are going to grow on your exit. And that was and that was probably the biggest lesson learned, maybe for me and many people in the business, is that at some point, you got to look at the fundamentals and look at metrics that historical, back to historical norms of how property and assets in general trade.
What's the best ever place the best ever listeners can reach you?
I would say my website, www.acarapartners.com.
Well, thank you so much for being on the show and sharing your advice with the best ever listeners and talking about your career progression from when you were working in the large institutional shop right out of school all the way to today, when being a founder and CEO of Akara Partners based in Chicago, and how you were working in 22 markets around the country, doing everything from deal sourcing to to selecting a GC to asset management and leasing and then exiting. Just really interesting to hear your perspective on that, and how because you're in such a niche type of business, there were some efficiencies because markets acted very similar once you knew what to look for. And of course there are outliers along the way, but it's really interesting to hear that, as well as your approach whenever you look at investments now at Akara Partners, and the formal investment committee that you've got set up from, even though it's a large institutional style approach, taking that approach from your previous experience and applying it to your company now. And then obviously the cautionary tales of cap rates, and at some point in time, making sure that we're looking at the fundamentals, and doing an analysis based on that. So thanks so much for being on the show and sharing your advice, and I hope you have the best ever day, and we'll talk to you soon.
Thanks, Joe. Thanks for having me. Take care.
If you need money for your flipping project, then go to fundthatflip.com/best ever. You'll know within 30 seconds if you're approved or not to get money for your residential flip. Go to fundthatflip.com/best ever.